have something to show you. This is not rocket science, it's visual hook. For the next 60 seconds, I will flash some code on the screen, some market numbers, and some eyeballs. And if you can't follow along or understand what you see, don't worry. Remember this feeling, because I'm going to take that feeling and weaponize it. Welcome to the invisible enemy. First, we need to establish what's happening here. What do these numbers mean? These are the top 10 most active stocks by volume traded every single day over the last few months. And these are all US stocks. Okay, so what does that mean? It means that for every single one of these stocks, the bid-ask spread has been getting progressively tighter over the last few months, which means that there's way more volume coming through than before. But that's just one tiny part of the story. Now, let's go to the second part. Here's a list of the top 10 largest market makers and their respective market share. Let's see who controls the volume. Okay, as you can see, Citadel is No. 1, followed by Virtue, then Jane Street, then Wolverine, then FC Stone, then G8, then BMO, then Flow Traders, then IMC, then RBC Capital Markets. Now, guess what? All of these market makers are proprietary trading firms. In other words, these companies are just betting on the direction of the markets every single day. Their main goal is to capture that bid-ask spread that you see. They literally make their money by front-running you and, quote, providing liquidity. Okay, so now let's put this all together. Imagine being a retail trader trying to get into Apple stock. You might be thinking to yourself, wow, today's looking like a good day to buy. So you put your limit order in at $157, but guess what happens? Your order gets filled immediately. You look at your trade and you see that you bought the stock at exactly $157, right? Girl, it turns out you were actually front-run by an HFT algo. To understand what happened, we need to dive a little deeper into these HFT algos. First off, the name. HFT stands for high frequency trading, and the term algo refers to algorithm. It's basically just a computer program that trades extremely quickly. We're talking milliseconds here, millions of trades per second. These are often referred to as bots. Second, how do they work? Well, there are two ways to look at it. The first is to pretend that you are a retail trader and you submit an order to buy Apple stock at $157. When you do this, you're essentially telling the market, hey, I'm willing to buy this stock at $157. But guess what? You're also giving away a ton of information about yourself, your order size, your entry price, and even your trading personality. The algo sees your order come through and it instantly knows two things about you. First, it knows that you're a dumb fuck who doesn't know what he's doing. And second, it knows where you entered your stop loss. The algo places its own orders in such a way that it's guaranteed to make money regardless of whether the market goes up or down. And it all happens in milliseconds. The second way to look at it is to pretend that you're an institutional investor. You've got billions of dollars to invest, and you relying on your AI to find value in the market. In this case, your AI is much smarter than the previous AI. It can read through news articles, it can track earnings, reports, it can scan social media, it can sift through analyst upgrades and downgrades. It can check order flow from other institutions, it can monitor real-time short interest, and it can track short-term volatility. And after analyzing all of this data, your AI submits an order to buy 1 million shares of Apple stock at $157. The HFT algo sees this order come through, and it instantly knows two things about you. First, it knows that you're a smart cookie who probably knows what he's doing. And second, it knows where you entered your stop loss. Okay? The algo places its own orders in such a way that it's guaranteed to make money regardless of whether the market goes up or down. And it all happens in milliseconds. In both cases, the result is the same. You think you entered your trade at $157, but in reality, you paid $157.01, but you never saw it. And worst of all, You don't even know that it happened. This is the invisible enemy. You can't see it, you can't feel it, but it's always there, lurking in the background, waiting to strike. But wait, there's more. There is another hidden force at play here. Something that is even more powerful, more manipulative, and frankly, more terrifying. It's the AI's AI, the institutional investors' artificial intelligence. Now, let me explain. Let's say that you're trying to buy Apple stock, but instead of placing a limit order, you decide to use a market order. Your market order goes out into the world, and it finds the best available price. Guess what? That best available price was actually a fake price set by an HFT algo, and the real price of Apple stock is actually $157.02. You don't know this because you never saw the fake price. But guess what? The AI knows this. It knows that the real price is $157.02, but it also knows that the market is about to move up by 1% in the next few minutes. So the AI decides to place a limit order at $157.7. Why $157.7? Because the AI knows that the market will move up by 1% in the next few minutes. So the AI is placing its limit order at the top of the pile. Guess what happens next? Okay? You go to your brokerage and you see that you bought the stock at $157.7. You think to yourself, wow, I got a great deal on that stock. Okay? I'm such a smart cookie. But guess what? You actually got ripped off. Okay? And the AI just made a ton of money. Here's another example. Let's say that you're trying to sell Apple stock, but instead of placing a limit order, you decide to use a market order. Your market order goes out into the world, and it finds the best available price. Guess what? So that best available price was actually a fake price set by an HFT algo. And the real price of Apple stock is actually $157.02 lower than the fake price. You don't know this because you never saw the fake price. But guess what? The AI knows this. It knows that the real price is $157.2. But it also knows that the market is about to move down by 1% in the next few minutes. So the AI decides to place a limit order at $157.5. Why $157.5? Because the AI knows that the market will move down by 1% in the next few minutes. So the AI is placing its limit order at the bottom of the pile. Guess what happens next? You go to your brokerage and you see that you sold the stock at $157.5. You think to yourself, wow, I got a great deal on that stock. I'm such a smart cookie. But guess what? Okay, you actually got ripped off. And the AI just made a ton of money. This is how these institutional investor A's work. They find those small fluctuations in the market, those 1% moves, and they bet against them. And they're so good at it that you don't even notice it happening. And that's why your money is not safe. Now, let's talk about this whole providing liquidity thing that I mentioned earlier. Providing liquidity is when a market maker adds his own orders to the order book. By adding these orders, he creates what is called liquidity. In a perfect world, this would be a great thing. After all, you want a market where buyers can easily find sellers and sellers can easily find buyers. But this is not a perfect world. It's a world where the richest people use their wealth and power to rig the game in their favor. And that's exactly what these market makers do. They add orders to the order book that they have no intention of filling. Instead, they just use these orders to gather information. For example, let's say that you place an order to buy 1,000 shares of Apple stock. When you do this, you're essentially telling the market, hey, I'm willing to buy this stock at whatever the current price is. The market maker sees this order, and he knows that you read just some dumb fuck who doesn't know what he is doing. So the market maker decides to place his own orders around your order. He knows that you'll probably fill one of these orders, and when you do, he'll make a small profit. He's basically milking you for all that you're worth. And that's why these market makers are so secretive. They don't want you to know what they're doing, because if you did, you wouldn't let them do it. Now, I don't know about you, but I'm starting to feel less confident about my ability to control my money. I mean, who's really in control here? The answer, of course, is nobody. Hey, nobody is in control. The market is a casino, a rigged game where the rules are made by the richest people in the world. And those who don't know the rules are doomed to lose. So I'll ask you, do you still think you're in control of your money?